How will the election actually affect the real estate and mortgage market? We're going to talk all about that right after this. Hey there, my name is Ryan Skaggs, and this is the Mortgage Minute. This channel is dedicated to everything mortgage, real estate, and interest rates. It is July of 2024, and we are looking at what happens in November. How will this affect our mortgage and real estate market? So I'm going to start right off and just tell you my opinion based upon what data I'm seeing and then what would happen. So looking at the kind of odds-on favorite right now, which is about 65% for Trump. So take the politics out. If this happens, then this would likely be what comes next. That's where we're kind of concentrating on. So if we see a 65% Trump win, then in that case, likely his tax cuts are going to stay aligned. They're not going to expire. We're going to continue to see that. That's going to be good overall for the economy. We're likely going to see downward pressure on the Fed to continue to decrease rates. Now, there is a double-edged sword there that I'm not necessarily getting into, but feel free to comment below what's going to happen. I love hearing from you all out there, but we're going to likely see that. If we do see these interest rates move down, so if we see more of these fiscal policies that are going to potentially stimulate the market, and I mean more of the equity market, what will that do to the real estate market? Well, if we see rates driving down faster than maybe what we anticipated, I believe that's going to put more buyers out there in the market. If we have more buyers out there in the market with the same level of inventory, we're going to continue to see prices increase. So that is not ideal. Homes are incredibly unaffordable in a majority of areas across the country. So just to get into starter homes in some of these areas, these prices have risen 30, 40% just in the last 5 years. I'll tell you what, I was reading a recent article that was talking about insurance costs, and from 2019 to 2024, the rebuild cost is up roughly 31%. So that would be the construction team that's, putting the nails in the wood. That's the cost of the copper pipe. That's the cost of this, the cost of that. But to rebuild is upwards of 31% just over these last 5 years. Take away the appreciation of the homes, but just to rebuild that home. So if rates were to drop and we potentially see prices going up, what is my advice or what should you be looking for as we move forward? If you can rent something below your means, maybe below what you could be doing, right? Maybe 20% below your means or something like that. I would highly encourage you to do that if you're thinking it's just going to be a 1 to 2 year kind of space. Because I do think prices are going to go up. So if you're not looking at doing something right now, I would take a pass on these next maybe 2 to 3 years. If you think you're going to look at something in the next 12 months, then I would say start looking right now. If you can find something below your means, now greater Chicagoland, for most people across the country, what's Chicago known for? Being the windy city, but a little dangerous at times, depending on what neighborhoods you're looking at. So again, you have to be conscious of the safety concerns and what you're getting for the property. But if you can be below your means and you're on a short-term basis, as much as my world, I'm a mortgage originator for over 10 years, almost 15 years now, I would love for you to be getting a mortgage and buying a home. But my advice is if it's only a 1 to 2 year play, then potentially, and you can find something, stay on the sidelines. If you're thinking, hey, I'm going to be in something for the next 5 to 7 years, then absolutely, I believe now is a better time than what we're going to see in a year. Because if you can acquire the home now, you can always refinance that interest rate lower. So if we do see rates move down, but you already own the home, we're likely going to see that go down. Now, we also have seen, when I was talking about these insurance costs and other things, you've got a company like State Farm putting out there that their rising insurance rates are going on. And one of the things that why I bring that up is these insurance rates is then we have the Biden administration just here in the month of July, just this week actually, putting some rate caps. So those that own 50 or more units can only raise their rents by 5%. Now, I am summarizing a much larger scale bill here. But with that said, you're going to see insurance costs for some of these buildings and areas going up by 10, 20, 30%. I cannot imagine if I'm a investor in one of these buildings or, an owner of one of these buildings or something else, that you are thrilled to hear those sorts of policies going into an election, right? So again, what would we see in terms of, kind of where this market is going? Again, and I just did predict it, it's like 64 cents, for a Trump election win. If that is the case, these are likely some of the things that we're going to see in terms of the interest rate market and the housing market just over these next 12 months. So would love for you to comment below. Tell me what you think is going to happen. If this is the scenario that plays out, I would love to hear from you below. Make sure and click that subscribe button. Weekly videos out there on the channel. Stay safe, and we'll see each other again very, very soon.